How y'all doing? This is F prime of X doing a video about the exponential moving averages. These are probably one of my favorite indicators to use. They're very simple. They are very important to stock prices, and they are very useful in making money on a consistent basis. Let me go into the chart. As you look at my chart here, you see that there are three lines that are weaving around the price action. You got a blue line, that's my 20 EMA, the orange is a 50 EMA, and the green is the 200 EMA. So you might be asking, what is an exponential moving average? Well, let me explain that first by explaining what a simple moving average is. A simple moving average is simply taking X amount of previous bars behind one bar, okay, and just giving you the average. So if you look at the chart here, you look at the current bar, it's 1816 and a quarter, and the blue line right below it, that's a 20 EMA, and that's taking the previous 20 bars, okay. And by the way, this is a 1 minute bar chart, so these are 20 minutes, and you would get the average of those 20 bars. That's a simple moving average. Now, what am I using? I'm using an exponential moving average. The only difference between an exponential moving average and a simple moving average is that the exponential moving average is going to apply more weight to the recent prices. Okay, this reduces lag. It gives you a bit more of an accurate representation of the average. So if we zoom in here, okay, and you see the blue line and you see this 1816, this bar, this is a 20 EMA. The EMA, the exponential moving average, it's just going to adapt a bit more. It's going to move a bit quicker because it's taking into account the recent changes in price. A simple moving average, it would probably be a bit lower. It wouldn't react as quickly. So that's the only difference there. So now, how do you utilize these EMAs in order to make money? Well, let me give you just a general lesson here. Let's go ahead and start. I will go back in time on the chart here and just give you a little lesson on how you can make money with these EMAs. Look at the price action here. Notice how this is, by the way, this is the ES Mini futures contract. Okay. Notice how it came down. It shot right through that 200 EMA. It kind of bobbled around there, and then it started to drift down, and it popped right back up, and it bounced off the 50 EMA, that orange line. That's one way of looking at these EMAs is, okay, how is the price reacting to a particular EMA? In this case, it's reacting to the 50 EMA. And if you can find out which EMA that price is going to react with the most, you can capitalize off that and make some money off it. It's a very common technique. You have to be very careful. You always have to use your stop losses. However, you can simply trade off the EMAs. Notice how it comes back up here, and it just kind of bobbles around the 50 and drops back down, and it pops right back up and bounces off, and so on and so forth. It's really playing against that 50 EMA. Now, look how it comes up here, and it shoots right up through the 200 EMA again. And now look what it does. Well, now it's changing its target. Instead of the 50 EMA, the orange, now it's changing its target to the 20 EMA, the blue line, and look how it just bounces right off of that. 1, 2 times, 3 times, 4 times, 5 times. It just bounces right up that 20 EMA. And again, a real easy trade in this situation, just put your stop loss right down below that 20 EMA. That's all you got to do. You see it bounce along that 20 EMA, once or twice. And all you got to do is just take a trade next time and just put a little stop, maybe 1 or 2 point stop, right below that 20 EMA. And if you would have done that on this trade right here, my goodness, you would have You probably would have gotten, one trade, a couple points there, a couple points there. You might have made, 200 or 300 bucks just off that little price action. Um, so that's one nice and easy method that you can use to make some money using the EMAs only. Notice here. Oh, actually, let me get to this. This is an important thing to talk about right here as well. Notice how it comes down here and it bounces off the 200 EMA. And now look how it just kind of goes up and down through that 200. You see that? It's popping up above the 200 EMA. It's below the 200 EMA. This is what they call a consolidation pattern. Consolidation pattern basically means that you're going sideways. There's no real definite direction. And the one thing you always want to make sure you don't do is trade. I mean, you can do this if you want, but it decreases your chances of success of making money. Um, Try not to trade inside of a consolidation pattern. When you notice that the stock price or the futures price is just kind of, it's bobbling along and it's just going straight across the screen here, what's going on is, the hedge funds and the big banks, they're just pushing people out of their positions. So if you got a short position, they're going to pop it up and push you out of that. If you got a long position, they're going to drop it down and hit your stop loss that way. So you want to kind of watch out for these areas when you're trading, because it's just very, very difficult to make a consistent source of money. You want to look for the definite directions in the stock price or the futures. This right here, this is a definite direction. It's trending upward. Obviously, you got some nice indicators of it bouncing off the 20 EMA once, twice, 3, 4, 5 times. Trade off of that, stop loss right underneath. You make a few good trades that way. So yeah, just make sure when you start to see it consolidate, just kind of stay away. And there's going to be plenty of opportunities in the market. You don't need to trade everything that you see. Just wait for those good, solid, clear opportunities, and you'll be fine. That's another thing about the stock market. You don't want to jump in to trade just to trade. You want to wait and sit back and wait for those opportunities to come to you. And that's where self-discipline comes in. And as a matter of fact, now that I bring up self-discipline, I'm probably going to have a whole video on that very concept, because that's one of the biggest mistake areas of most traders, is their inability to utilize some self-discipline. But I'm going to do that in another video. So anyway, this is F'(X). I'm going to go ahead and end this video. Oh, by the way, if you are interested in listening to me speak in a forum about the stock market, if you want to know more about the stock market, if you have any questions, you can come on down. I have my own chat room, and let me show you how to get there if you're interested. I'm on a program called Pal Talk, and all you got to do is just go on Google and download Pal Talk Messenger, or actually just Google Pal Talk, and you can download an application. And when you start the application, you'll get something called a Pal Talk Messenger. It'll pop up just like what you see here on the screen. And if you want to find my room, just go down to the View All button, and you click on that. Okay, and your room list pops up here. You got the different sections of the rooms on your left-hand side, and I'm in the Social Issues and Politics section. And then you go to the subsection of Government and Politics, and you scroll down and you'll see the room F'(X) Stock Market Day Trading. That's my individual chat room. I'm the room moderator, and basically what I do is I sit there during the trading hours. I go through some trading plays. I answer a few questions. We also have a little politics, a little stock market, economics chat. If you want to come up and say something, it's kind of just a free-for-all little forum. So come on down if you're interested. And that's about it for right now. F'(X) signing out.